Hi and welcome to the Dow Market View for Friday the 29th of August 2014. Starting off on the left hand side here, we can see that we've got a sell signal coming into the market. This is the advanced or preliminary GDP that was released at 1:30. You can see the market trading up to the resistance to the left there, which is 76% that I'd marked up earlier in the session of this selling that came into the market. The market stopped here, then it also stopped at the S2 there, which is support 2, trading back down to the S1, which of course you can see the buying over to the left. And as I've said in several of the videos, before starting to trade, you should be looking at the market at least 10 minutes beforehand so that you can do things like this. We've got a test bar over on the left. This is where the market's likely to find support should we have any sell signals, because in the background, if I just switch to the daily chart, we have a bull market, and this bull market has been going on now for some let me have a think, where are we, 5 years, and you can see this uptrend in the market there in the background, and the background's really important, as I have spoken about before. So we've got this buying here, market trading back up to these resistance areas, and then of course the market opens. We've got resistance here, the market then moves lower. We've got a potential sell signal there, so let me just switch tools. Let's get rid of that, make a bit more space, and drag the chart over to the left there. Right, so we've got a potential sell, and it's actually through the BRN then, which is the big round number of 17,050. So the market starts off well, but to the left of this chart we have some buying coming into the market. You can see where the market's been tested, so we have to be aware of this. And guess what? We see the buying coming into the market. Not a huge amount. We've got more selling than we have buying, but of course the selling disappears, and then we see the buying coming back into the market above the entry price, above the support 1, and then the market trying to trade up to the 17,050 area there, the BRN. So if I get the 76% retracement or fib retracement, I know we've got this high down to this low. And is the market going to take out my stop is the question. What strength is in the market? So I will draw this in when the market reverses on the position and starts to come back, and here we can see we've got to go above the BRN, which the market does. There's the 76% retracement. The market goes through on low volume and then reverses and starts to come back. So we think, great, everything's fine. Let me just remove this. Well, actually, let me just talk about this before I remove it. We've got the market being retested again down to this level. We can see it is being tested because, again, this is why it's important, or why I prefer to use open, high, low, close as opposed to candles, because I can see immediately the market's coming off the recent support to the left there and here too. So now we've got this sort of triple bottom situation that's starting to unfold here. So price is coming off the lows towards halfway, so I know there's some sort of buying in the market there. So I'm just going to remove this for a second, because what I want to show you is I now need to know, having gone down, come back, stopped at that 76%, how is the market going to find itself once it goes through the entry point again? Will it have the strength to take out the recent low, and will it go towards the scalp? Well, I can do this by measuring from the recent low to the recent high that's left behind, and I can see immediately that the market will not close below this area. So I have to make a decision. I either want to mitigate some of the loss or wait and see if the market trades higher and attempts once again to fail to close above this 76% from here to here. You can see again we've got a bit more difficulty there. We're at the BRN as well. The market's struggling there, it's trying to fight back, but then manages to go through, and then we see the market stopping out the trade there. So that's how you can read the markets in real time, and there are videos already recorded that show this. You know, having a few tools does allow you to actually see what strength is in the market. Now, one thing that I didn't bring to your attention, I just wanted to show you how you would read the market there if you didn't have the new buy signal taking that into account. So I'm just going to pop that into there. I'm just going to put the old sell signal back on as well. So here you've got the market trading down, and we find the buying coming into the market, and we get a new buy signal there. The market starts to move higher. We've seen how prices find support at that 76 and then continue to move higher, and thereby taking out the sell side there with the buy that came into the market there. So the loss isn't 28 points, it's actually 54 to 38, which is 16 points there. So prices then continue higher. They trade up to, let me just remove that, they trade up to the scalp, and then the market starts to come back. And as I've said before about trailing stops, when the market closes above the scalp, you can then consider moving your stop to break even. But the market doesn't close above the scalp. We let it breathe. We see the market coming down towards the entry price. And if you wanted to move your stop earlier than waiting for the market to close above the scalp, what you've got to do is look at the detail in the chart again, and we've got the BRN there. So if you wanted to actually reduce the 30 pip or point potential risk there, what you need to do is to look, and there you see, as I say, this BRN. You want to be below this, because this is where you can see over here the market has been flirting with this and playing with this and also teasing it. So you want to be below that sort of area. I prefer to give the market room to breathe, and the statistics show that this is the case, that the more breathing room the better, to allow the market then to unfold. And then we see the market eventually, it creates this sort of triangle pattern as well. It's what's known as an ascending triangle. If I just grab a line and just draw this on the chart for you, you can see this sort of wedge shape, and the more that it becomes coiled, the more chance it's got of breaking out. You see it break out, and then we're above the scalp now, and we can start trailing the stop 100% below the just find the tool, there we go, below the rising lows. We've got the high of the previous day, the market doesn't take this out, and eventually we get stopped out in this area here for if I can see the price there, 17,088 from the 17,054. And if we get the measuring tool, if you wanted to do this manually, you can go from just the entry price to there, and you will see 35 pips calculated for you on the chart there. So that's the only trade of yesterday. There are a couple more on the charts, but so late in the session, and look how the volume dropped off there, causing well, basically showing no interest in the market at after the initial move of the day, which is no surprise really, because we had the news item to go with this as well. Let's have a quick look at the daily charts, so look at the bigger picture, because this is the one that gives all the information. Let me just narrow the range there a bit so we can see it. Let me bring in some tools as well. Let's go from the recent high. We see the market yesterday stuck at where we're currently trading at the moment, which is around the 17,108 level there. We've got to take out the recent high, but we to get a decent correction out of this, because of the pattern that I spoke about yesterday and the previous day as well. So have a look at those videos with regards to the market making these new all-time highs. So stuck in this sideways range at the moment, which again is indicative following a rise back to the all-time highs. So the market needs to take this out in order to move higher. Let's see what news we got that could possibly do this. We need to fast forward all the way past 2 p.m. 2:45. We've got Chicago PMI. This is to be released. It's forecast to be higher, which is bullish for the market. Friday is generally a good day for the Dow as well, statistically giving a decent return. So let's hope this is the case for today. Right, that's it for this video. It's also Friday, so have a great weekend after hopefully a decent afternoon's trading and evening's trading. See you on Monday. As ever, thanks for your support and also for watching.